As you know, the Federal Reserve does not have perfect control over the bond market.
Thank you very much.
The gentleman from Texas.
Thank you, Mr. Chairman. I find it rather ironic that the Federal Reserve has complete control of the money supply, and yet it's the Treasury that's supposed to protect the value of the dollar. It seems like you have a little bit of responsibility for the value of the dollar as well. I have a question about the GDP. In the first quarter, our GDP didn't do so well. It was less than 1%. Our population growth average is about 1.5%. So if we have total wealth divided, by the population, we actually have negative growth. And could this not be a part of the explanation on why some people feel inequality, that they're not doing as well in the economy? Wouldn't this explain some of the concerns that we have?
Well, Congressman, that was, of course, a single quarter, and there were a number of temporary factors that held down GDP growth in the first quarter, including the liquidation of the inventory overhang, which I mentioned before, a swing in our trade balance, a temporary swing, and a temporary decline in federal defense spending. All those things have been reversing now, and so I think we'll be seeing in the second quarter something closer to 3% growth. Between the two, first half of the year overall, it'll be a more healthy rate of growth.
We have a savings rate which is negative, and if we had true capitalism, this would be very, very serious because we'd have no savings and no capital to invest. Today, with our monetary system, we resort to other means. We can create credit and money out of thin air, and it acts as capital by stealing value from the existing currency. And we've been doing that for a long time. So the process can continue, but it literally is the inflation. Also, we can resort to borrowing overseas, and we're permitted, because we have the reserve currency of the world, to export our inflation, and that seems to be a free ride for us as well. But how long can we fool the world? How long can we continue with a current account deficit of 6% if our productive jobs are going overseas, and like the gentleman mentioned earlier about these more jobs going overseas, eventually this is going to catch up with us. Is it conceivable that we could live on capital formation by creation of money and credit out of thin air? If that's the case, we would never have to go to work again, if that's true. It seems like we really have to go to work, we really have to save, and we really have to invest, and we really have to get these jobs back. But I see so many of our problems as a consequence of a monetary system that discourages savings, encourages a free ride for us, because there is still a lot of trust for the dollar, although that trust is going down every day. And I think we have to face up to the consequences of what this might mean to us.
Well, first, our national saving includes corporate savings as well as household savings. So you put those together and you get a positive number. So there is some net saving going on in the United States. But, Congressman, you're absolutely right that we're also relying pretty heavily on borrowing from abroad, which is our current account deficit. I think that's sustainable for a while because foreigners seem quite interested in acquiring U.S. assets. We have very deep and liquid financial markets. However, I also agree with you that that's not a long-term sustainable situation by any means, and we need to be working to try to bring that current account deficit down over time. In answer to a previous question, I talked a bit about the importance of structural change, increasing saving here in the United States, increasing attention to domestic demand with our trading partners.
You did say in your talk that the predominant policy concern was inflation, which is encouraging that there is a concern. Of course, once again, inflation is a monetary phenomenon, and we have to deal with it. War sometimes is not healthy for a currency or for the keeping prices down, and at least inflation. It's hard to find throughout all of history when war didn't create price inflation, because even in ancient times, countries resorted to clipping coins and diluting values or whatever. They inflated the currency because people generally don't like to pay for the war. And yet in the 70s, we had consequences of guns and butter. Now we're having guns and butter again, and we're having consequences. And it just looks like we may well come to a 79.80. Do you anticipate that there's a possibility that we'll face a crisis of the dollar such as we had in 79 and 1980?
The Federal Reserve is committed to maintaining low and stable inflation, and I'm very confident we'll be able to do that.
So you're not answering whether or not you anticipate a problem.
I'm not anticipating a problem like 79.80, no.
With your fingers crossed, I guess. Okay, thank you.
The gentleman from New Hampshire, Mr. Hodes.